Yo, guys, how we doing? Boom, we're live. How's it going, guys? Right, tonight joining me is Castillo Trading, a crypto OG, and someone I've known about for a very long time. And as we just talked about, have never actually really spoken. So this is going to be a nice podcast because we're going to get to know each other live in front of people and cover a range of different topics, which I've seen him growing in over a long period of time now. So we're going to talk a little bit about how he trades. And one of the things that I do with these podcast series is just to understand how other traders look at the market, and also then look more into Castillo's background and his current lifestyle and how he manages life around trading. And then some other subjects about building in the bear market, AI, because if you've been following these streams, then you know I'm kind of looking into getting into automated trading to make my lifestyle a little bit less heavy, I guess. And then balancing family life and trading, which has been a big topic of mine over the past 18 months or so as I had my first boy. So let's get into this, bro. How you doing? Thank you for joining me.
Yeah, of course, man. Appreciate you having me on. Yeah, like I said, I've been following your work for a little bit too, man, and it's great. So, happy to jump on here and kind of talk shop with you.
Good stuff. Right, let's get straight into it. Let's jump straight into chapter one, teaching me how you trade. So, if you've got something you've traded recently or something you're looking at the moment, but kind of just want to know your process on how you look at the market, and then how you go from analyzing what you see to then executing a trade. Again, if that's something you've already taken or something you're looking to action sometime soon.
Yeah, absolutely, man. Absolutely. I think that's always kind of the struggle when you first get started with trading is you don't really like know where to start. You kind of have to. There's so much information out there when it comes to different indicators, RSIs, OBVs, moving averages, all that sort of stuff. There's so many different techniques out there, and so it is kind of a struggle to get yourself settled with what you're comfortable with. So I've kind of always told people to just try everything, whatever sits well with you, because everybody perceives the market just a little bit differently. Everybody sees levels just a little bit differently. And so, one thing that might work for somebody else might not work for you. So it is always important to kind of, always be learning, or at least always be willing to learn a new strategy, learn a new technique. But something that resonated super well and super easy for me was just basic support and resistance levels. I was that trader in the beginning where I tried pretty much everything as far as like golden crosses, moving averages, parabolic SARs, different coded indicators that people have. And something that I realized early on was keeping things simple was just very much more my style, right? I didn't need to overcomplicate things with all these different moving indicators, and then one indicator goes off and the other ones are kind of lagging, or whatever. But I had a mentor of mine when I was first trading the stock market in 2017, and his name is Roland Wolf. And the one thing that he really taught me, right, was look, if you can identify support and resistance levels, like what to be focused on. And I think for me, it was kind of that light bulb that kind of clicked, where it's like, okay, I don't need to be doing all this other stuff, because if you can identify basic support and resistance, you know where to short, you know where to long, whether that's using order blocks or fair value gaps, whatever perceives to you the best. I think that's kind of the way to go. And so, yeah, I try and keep it simple, man. It's, basic support, resistance levels. That way you can identify when to long, when to short. And that's kind of why I have my system here when it comes to NPOC levels and current ranges. I think those are really the two strategies and techniques kind of combined into one that has really kind of helped me kind of elevate in my trading game.
So, what's an NPO? I know point of control, right, is POC. What's NPOC?
Yeah, so point of control and naked point of control, they're two different, right? So it's basically volume profiling, right? And the way that I like to look at my strategy is like a very dumbed down version of volume profiling, because if you look at volume profiling, there's a lot going on. There's value area highs, value area lows. You can get onto a platform like Sierra Charts or Exo Charts, and it just looks a little bit different. It's like the footprint charting, I think, that a lot of people are into, which it's basically the same thing as footprint charting, but it just dumbs it down into finding where those liquidities, where those high volume and high liquidity prices are for the day. So when I look at my chart here, and again, very basic. It's not overcomplicated with footprint charting or anything like that. It's a normal chart on TradingView, and then I just add the indicator SVP. So the only thing that I change on here, it's called session volume profiling. And the only thing I change on here is I extend the point of control to the right. And so when a point of control is untouched, that's what you consider a naked point of control. And when you have points of control that have been hit, then they get changed to previous day points of control. So the way that I run my system is, there's multiple ways that you can do it. And I think I get that question a lot, like, oh, what exchange do you use? What time frame do you use? And so for me, it's always just being consistent with one. Because if you look at a footprint chart from different exchanges, the volume inflow is going to be different. So if you look like at BitMEX, it'll be different from Coinbase, which will be different from Bybit, which will be different from OKX, right? Because they're all going to have different volume inflows into the BTC price. So I've always kept it very basic, and I've always used the BitMEX exchange because, one, BitMEX is king when it comes to perps. They were the first ones to do it. They're still, really good at it. They kind of created perpetual trading and what it is today for the crypto industry. If you look at Binance and Bybit, they all came after BitMEX. So BitMEX is kind of the one that I think is like, quote unquote, the king of it. So that's the why I focus on the BitMEX chart, and then I focus on the 4-hour chart. And you can use different time frames. You can use the 1 day, you can use the 12-hour, but this has kind of just been the structure and setup that has worked the best for me. And so that's kind of what I always tell people, because some people will be trading on Binance or on Coinbase, but they're going to have different NPOC levels than what BitMEX has. And they're not off by a lot. There's maybe an ARB of like maybe $100 or $50 when it comes to where the actual NPOC print is. And the only thing that the naked point of control is just where the highest volume inflow came in on that day. And so that's where the print happens every single day, at the daily close. And that's kind of where I find like my pivots from. That's where I find areas of interest to long, areas of interest to short. When price was really up at these levels on Bitcoin, up at 80,000, we had 4 naked points of control to the downside. So all that was indicating to me was that we had untapped liquidity within the BTC range that normally, if the range continues to range, which I always kind of like to say that, I've kind of taken it from Daniel at Chart Champions, you trade the range until it breaks. There's no reason to be playing breakouts. There's no reason to be playing breakdowns. Yes, it happens sometimes, but a majority of the time, markets are ranging. And so I always tell people, if you can build a ranging skill set, you have the ability to extract capital from the markets at any point in time. Maybe during breakouts and breakdowns, it can be a little bit more difficult. But NPOC prints are just a great way for me to kind of locate where that untapped liquidity is from prior days. So when BTC was up here pressing 80,000, the one thing that I did notice was that we had 4 NPOC prints that were not hit yet. And again, 3 of them have actually been hit already. The past couple of days have been a little bit of bloodbath for BTC, but we also still have one more at 36,864. So that's why I kind of tell people, some of the traders in my VIP group, if we're sitting here at range highs and we know that we have untapped liquidity to the downside, this should be an area where you're taking either profits on or you're flipping short to hedge. And especially when we're looking at a current range that we're watching, this is considered premium prices. This is considered discounted prices. When you look to be building longs, I look to be building longs at discounted prices. And when you look to be taking profits or shorting, you want to be doing that at premium prices. So all it's doing is taking basic support and resistance levels and then throwing in there some volume profiling that allows you to kind of find where that untapped liquidity is.
So when you're looking to execute a trade, you're now just, let's say you're on the 4-hourly time frame, you've got your NPOCs. So let's say you've got the most recent one that has broken, which I guess is at about just under 68K. Would you then be looking to see price move back into it to reject off of it in order to get a short? Is that how you would play it, or is there, a little bit of more of a different system?
Yeah, no, it's exactly kind of what you said. I have all my setups over here that I look for, and I kind of create those setups based off of NPOC prints, and then also based off current ranges as well. Current ranges is an area to where I like to focus on too, just because when it comes to current ranges, you can find premium and discounted price points. So when you can kind of add them into Confluence, you can kind of see exactly, what is important with that. And when I look at something like a current range here, we know what we want to do when it comes to premium prices. We know that this is either a looking to short area or a taking profit area. So when I add them into Confluence with NPOC prints, that's kind of where we look to find like the pivot, right? So as of right now, as BTC has dropped below, 65K, to me, the risk reward on the short is not really there anymore. I think that we had the opportunity to be shorting, and I did short BTC at 80K. I closed it a little bit early, but I was shorting BTC up at upper limit premium prices. And then we also had some confluence within NPOC prints within that. And so trying to find like a new trade going forward, I basically look for the opposite direction. So if we're sitting here at 65, for me, there's no reason to short 65. I would look to be shorting a bounce up. And whether that bounce up gets rejected at 71 or it gets rejected at 75, 76, these are the two NPOC print clusters that I would be looking to actually take a short trade into, because then you could kind of write it back down. And again, if we do bounce to 71, if we do bounce to 75, we know that those are both part of the premium price range. So that's kind of the way that I look to do it. And as we're sitting here in discounted prices, I still think BTC can go a little bit lower. Like, we have this NPOC print at right now, it's the 63 mark. And so I would look for that to be closing first before we could potentially get a bounce, right? And then you can look to play that to the long side. And then if we get a bounce, then you could look to play that down to the short side. So it's really just about kind of trading a little bit of the opposite direction on the way price action is moving. And so again, just try not to overcomplicate it. On red days, it's really hard to be longing. And then, because you just think it's going to drop lower and lower. But historically, that's when the best longs are kind of presented, is on red days. And same thing with shorting. When everything is green and it continues to go up, that's when you can usually get a good short entry. Now, it obviously depends on market conditions. You want to know if it's a choppy market condition or if it's breakdown or a breakout market condition, because these rules can easily be invalidated during breakdowns and breakouts. But the way that I like to just focus on is, a majority of the time markets are trading sideways, which means that they're kind of ranging. And it's kind of why I break this down into different current ranges as well. I'll take my current range chart here, and we had this range prior that we were really watching too, back in, it was like November of 2025 all the way to about January of 2026. So a majority of the time, if you were trading this range, you were doing pretty well, because you could be looking to position yourself at discounted prices and then taking profits at premium prices, or hedging short at premium prices. The way that you'll get caught on this strategy is if you kind of get caught in these breakdown areas here, because these breakdown areas is when, okay, you're looking to be long, but we end up crashing even further. So it's kind of like, okay, you can make an attempt here at lower limit of this range here, but if it fails, you have to know like where your invalidation is. And maybe your invalidation is a percentage loss or a money loss or like a swing of the lows loss. When it comes to managing your risk, I do always say that people kind of have to find what their risk is. Because I think a lot of people want to be spoon-fed trades every single day, where the stop loss is, where the entry is, where the take profits are. But sometimes it could be a little bit difficult, because a 5% stop loss for me can be something completely different for somebody else that's completely different from you. So you kind of have to know where your risk tolerance is within your portfolio size, your position size, and then just like your overall knowledge of how much you want to be risking on each trade. That's kind of the way that I like to really perceive markets, is just basically horizontal lines. You find out where that support, where that resistance is. And if you look where we rejected right here at upper limit of this lower range, you could see that that was a support area that then turned to resistance. So these lines and levels are respected fairly well. And then I always like to just add confluence of those volume profiling, footprint charting, liquidity levels. And it's just two basic concepts kind of combined into one that I've found to be a very beneficial vehicle for me.
Yeah, you've been trading what, like 10 years? Something like that?
Ye- Yes, yes. So I started in the stock market. I think my first trade ever in the stock market was 2015.
Yeah, okay.
And then I traded the stock market for, let's see, 15, 16, 17, for about 3 years, right? So not very successful, but at the end of the day, it's kind of like building your knowledge account within all of that, right? There's not very many people that start trading and they're successful right away. I had smaller bankroll, I was kind of just trying to learn from so many different people out there, but I started in 2015, 2016, and 2017 in the stock market. And then 2017, 2018 is when I kind of transitioned over into crypto.
So one thing I've found, I've been trading similar sort of time as you, that as you get further along in your journey, then you do end up just making it simple. Like the entire outlook is simple. So for me, very similar to you, I just look at supply and demand levels, and then we'll look for a range to form at supply and demand level. Supply and demand could also be support and resistance. It could just be a local high or a swing high or something like that. I'm just looking for a range to form, go sideways, and then break out in the direction of a trend, or like where you've got at the top the premium. I'll be looking for a breakdown and a reversal, right? Which is why I shorted up there. Um, so I kind of look at it things very similar to you. I think it's maybe something that happens when you've been trading for quite a long time. You just strip everything out and just go, do you know what? I just need a few lines. Um,
Yeah.
so going back to when you had, I think it was the other chart where you'd said you'd look for maybe, oh no, it was that previous chart. Sorry, where you'd be looking, for example, to get short if it pushed back up towards about 71K. Now that it's very much coming into range lows, is that something you would be looking at to get long on? I don't know what you would call it, like a reclaim of um, above the resistance to then to look long, or do you have to see more to get long and have like a shorts only mode? So for me, for example, being short from the top of the range, I'm just short into the bottom of the range, expecting it to break further south. But obviously, we're coming into an area now where longs make more sense, risk reward rise. Even if you're just taking away the fact that we've had a massive nuke and we're in a higher time frame downtrend. Do you play both sides quite regularly, like, or are you have to see a lot more in order to change kind of what the trend is doing, if that makes sense?
Yeah, no, no, it's a good question. And yeah, I think, it usually comes with like knowing your strengths as a trader. I've never really been the best short seller, but what I'm normally better at is having patience for longs. And so I'll head short sometimes every now and then, but it's not like my best strategy or like my best technique that I use as a trader. I've seen my biggest wins and my biggest trades off of having patience for lower and then being ready to react when that lower happens. Right? I normally like to tell my guys, like, look, there's three steps that kind of create a good or profitable trade. One of them, the first one is plan the trade, right? So if price is sitting up here and we know that we want a retest of lower, which we've kind of created this a couple times on the long, we kind of created this on 3-2. So about 3 months ago, and then on 4-6 as well, we had both of these setups sitting there for about a month, right? So that was kind of my indication to be like, okay, let's plan this trade. If we get the rejection into a premium price and a resistance level that we're looking for, then we know which areas that we want. So that's one, planning the trade. And then the second step is having patience for the trade. Because like I said, we created this about 2 and 3 months ago to long these lower end POC levels, but they didn't come right away. So we ended up pushing higher. And once that kind of is having that patience for that trade, then when we do get the drop, that's where step three comes, because you plan the trade, you had patience for the trade, and then the last thing is kind of execute the trade. And that's kind of going to be the hardest part. It's going to be the part that kind of trips most people up the most, because they can plan it perfectly, they can have the patience that they need, but then when price actually dives down into the area that they're looking to long, they may actually flip bearish, right? So that's kind of why I like having these setups over here on the side on the object tree on TradingView for me, because then it always keeps me grounded to when price starts to hit certain levels. We knew that we created, hey, this is an area that we're a little bit more interested in looking for longs now instead of for shorts. So that's kind of the way that I like to do it, is like plan, patience, execute. Of course, execute is going to be the hardest. And yeah, I think like right now, it is possible that we could deviate a little bit lower, sweep of the lows. And this is kind of coming from a structure and a setup that I've been watching really for a couple of months now. And it kind of goes back into the formulation of the last bottom that we had on Bitcoin. So if you look at this range right here in 2022, we kind of knew, I would say that as where price is sitting and where we're sitting on BTC, we're kind of like in this area, right? Because we ran up or we ran down and then we ran slow grind back up. And then we ended up resisting here and we're kind of like in this mark. So, this is like a good bottom formation from the last lows that we've seen. So you kind of want to be careful, because you know that we could potentially be trading in this area kind of between the midline and the lower limit, which is a discounted price point. But it's kind of like a place where you don't want to be like overly aggressive, because we do know heading into midterms, it's very key. The last two big rallies on Bitcoin have always come either right before or after midterms, and midterms happened on November 5th, right? So we saw this deviation outside of range. And when I go to my current structure on Bitcoin, I kind of want to play it the same, to where heading into midterms in November, it's a possibility that that could be the quote unquote low for Bitcoin. So I'm kind of just looking for a little bit of the same type of price action where we kind of chop between lower limit and median ML. There could be some good trades in there, could be not, but it just depends on if you're looking to be, maybe a couple day swing trader, or a low term time frame high frequency trader with high leverage. But I would assume that we see something very similar to where maybe we drop below, we deviate down into the mid to low 50s, people start calling for 40s, people start calling for 30s, and then heading into midterms, that's when we can really see that move up. So I do think right now, based off of prior lows that were formed on Bitcoin, that you don't want to be too much of a bull tart and just long just because we're seeing a little bit of a discount. So again, that's kind of me understanding market dynamics, right? We are getting to discounted prices, but is it something that you want to be aggressive at right away? Maybe not. Maybe you could look for some swing trades kind of within this choppy zone, to where maybe we close this NPOC that we're watching at 63, and then we can get a little bit of a bounce up to like midline of the range, which is like right here, and then we kind of just chop within this before deviating down into those mid 50k NPOC prints, because we do have some prints down in that area that I would be liking to close. Again, deviate outside of lower limit with acceptance back in. So again, it's just about knowing what is happening within the markets, where the dynamics are, how much you're willing to risk at a certain point. But I am under the mindset that, look, I think that heading into midterms, it's probably a good time to really be a little bit more bullish after. So it comes November 5th is when the midterms are. And then also a make or break moment for me this past couple of days, really the last week, was the 2025 yearly lows. I was very vocal to my community and on X, look, this is the line that needs to be saved on a weekly close. So if we drop below this line, we have the ability to be a little bit more bearish. And then, if we hold on the weekly close, we have the ability to be a little bit more bullish. So that's kind of the way that I kind of run like my thesis. You kind of have to have like an anchor chart, right? Which is like a heights from time frame, monthly, weekly, and then you can dial it down to maybe the 15-minute chart, maybe the 4-hour chart, the daily chart, things like that. So kind of like have like a lot of confluence points within that.
Yeah, I like what you've just shown me though. I hadn't actually seen. I like fractals and I like looking back at price history for that kind of stuff. But I hadn't actually seen that or looked into it. What you just mentioned back in 2022, and that makes a lot of sense to me. And I think one of the sort of prevailing narratives over the past year or so, well, since around about October, was super cycle. We're only going to go up, and the 4-year cycle thing is dead, and it's kind of playing out pretty similarly, right? And even I'd said the way that the top gets formed is normally how you can look to trade the bottom. Whereas if you've got like a parabolic top, like we experienced back in like 2017, we ended up having a big nuke down into 3K in 2018 and then bounced
Mhm.
quite hard, like nicely off of it. Same in 2020. But I think, yeah, I just one thing I've noticed over the years is that you mark out ranges and then that's kind of your map for a specific period of time. But I think that makes a lot of sense what you've said there. It's a very, I think if I say it's a very simple view, I don't mean to sound like it's basic, but it works best in trading. I think people overcomplicate things. Um, so when you said about looking for it to maybe chop around at the lower limit of the range. Obviously, on the 4 hourly chart at the moment, we could end up ranging down there for the next, 6 to 8 weeks, for example. Are you looking to get active on lower time frames, like you just said, like maybe the 15-minute, or are you just looking at as I know we're going to be chopping around for a unspecified amount of time, and I'm just going to preserve my capital and look to build on a breakout of that or something. How would you play that?
Yeah, yeah, I think that's a good question, man. I think that's really you're right when people say a lot of the times that it can get like overcomplicated. People kind of overcomplicate things. But yeah, no, the way that I tell my guys is like, look, if you want to be trading lower term time frames, yeah, I would say you could go to the 15-minute and the 30-minute. And normally what I would think would be the next range that we could be focused on would really just be between the median ML and lower limit. And then the principles of that range are going to be exactly the same, right? So we mark out where that range is going to be. And then we can kind of close this one and have a little bit more of a visual here. And you can kind of go down to the 30-minute or the 1 hour, whatever fits people best. But I would say we could probably focus on something like this. And then, yeah, the principles would be the exact same where we have premium prices, we have discounted prices, and it would be nice to get like more bidding in where this NPOC is, maybe down levels, a little bit lower into the 60 where the wick was. And then, yeah, just looking to play this range within NPOC prints because the NPOC prints will print every day. And so that's kind of, what I would be focused on is like the most local prints. And then also one thing too that I try and tell people is like you don't want to be like the bottom catcher or the top catcher. If you can just find and locate areas of interest that you're willing to be building a position, it doesn't really matter if you're catching the exact bottom. We just know that when price goes down into discounted prices, this is kind of where we're looking to be building an average on those longs. And that could be, however you want to divvy it out. If you want to have, four entries at 25% of the position size, kind of, sectioned out within this, and then you get an average somewhere in here. It's just kind of finding and locating an area that you're willing to be building a position at. And a lot of the times, like your stop loss could be, where a swing of the low is, like just on this range that we're watching here, a good stop loss could be, a break of this wick or maybe like a 4 to 5 to 6% stop loss on the trade. Again, it's all going to depend too, because when you throw leverage in there, things get a little bit differently, because you could be down 50% on one initial entry, but you do know, if you're down 50% on your first starter position, that you're not down that much. And so leverage can always be one of those things that makes things a little bit tough for people, just because the percentage and the drawdown happen a lot quicker than if you're doing spot. But I kind of just run it like that. Like run it as like this is the area that's a discounted price point that we really would want to be building a position at. So you can take starter positions and have entries all the way up, 4 or 5 different times before you want to throw your stop loss on. But the likelihood of you bottom ticking a buy or bottom ticking a bid is very, very slim. Not a lot of times people are catching the Pico bottom. So I like to just locate areas of interest that I know I'm willing to be bidding at. And those are going to be discounted prices. Because if your first initial entry is, let's just say where this naked point of control is at 63, but then we drop all the way down to 62, 61 area, you don't want that drop to kind of invalidate that trade for you. You basically just want it to give you the ability to kind of build a position larger. Because if your first entry is at 63, and you know that that's only 20% of your position size, you have dry powder to average down. So if you get those averages down, it's not a bad thing. It's a good thing. Like sometimes if you take a starter position, you also want price to drop a little bit lower. That way you can build a larger position size. So it doesn't matter if your first entry is at 63 or you get ads at 61. If it does hold true to the support and resistance levels, which this would be considered a support level, you don't anticipate support to be broken. You don't anticipate resistance to be broken. You anticipate them to hold. Then if we do bounce, and again, you're not looking for a massive bounce, you're looking at technically from, let's just say 62 up to 68, which is a 10% bounce, which I think is pretty doable in these conditions. Then you could start to average out or scale out or take full profits back at premium prices. So it's about kind of like building and navigating the trade that fits you best, because it's always going to be different for everybody. People ask me that all the time, like, well, what's your position size on this? What percent of your portfolio are you putting in on this trade? And it's very hard to answer those questions because everybody's going to be different. If I tell someone that I'm in, 10 grand on this trade and they have a portfolio size of 10 grand and they're trying to mirror and match that trade exactly, it puts them at a little bit of a disadvantage because, the 10 grand to me is a little bit less meaningful than the 10 grand for them. So I kind of like take the approach of it being like golf. I don't know if you play golf, but it's very hard to mirror someone's shot perfectly. And so it's very hard to mirror someone's trade perfectly because there's different logistics. There's position size, there's entry, there's experience, there's portfolio size. And I like to say the same thing with golf. Your golf ball is never going to land on somebody else's perfectly. You're using different clubs. Some people are hitting out of the dirt. Some people are hitting out of the fairway. Some people are stronger than others. Some people use different clubs. So it's very, very difficult to mirror someone's trade exactly. So that's kind of why I like to just take the approach of teaching people how to find support resistance levels, teaching people how to build longs at areas of interest at discounted prices, and then, vice versa for shorting and at premium.
Yeah. First of all, I'm dog shit at golf. Maybe I'll pick it up in my later years. Couple of points on that. First of all, yeah, the thing I've noticed with trading is that it is a completely subjective experience, and even though we might agree on the same support level, we're both going to enter it at a different time. We're going to enter it at different size. We're going to hold it for a different amount of time. We're going to wait for the trigger at different times. It's just like a completely different thing for absolutely everyone, isn't it? And I think yeah, that the people that I was speaking to Popeye last week, Sailor Man Crypto, and he was saying with his community of people, well, he's noticed everyone just wants to give me the entry, give me the stop loss, give me the take profit, but it's not a long-term viable thing. You kind of touched on it then as well, but about scaling into trades, is that something you do pretty much with every trade, or is it, when it comes to big value areas like we're in now, that's when you start to scale in a little bit, or is it just like a common approach for you when you're entering trades?
Yeah, I mean, I look to scale into trades pretty much every time. I don't go all in, right away. I kind of look to be building that long over a period. It could take a day, it could take maybe 2 days. But I definitely look to be scaling in and scaling out of every trade. I don't, and I think you kind of like learn this over experience too. It's if you go all in at one point and all out at one point, it may work a couple times, but eventually, you're going to kind of bleed that of a count of 1,000 cuts. So I do my best for each trade to dollar cost average into areas of interest that I like, and then scale out of area interests that I like as well. And sometimes, that may mean that I don't do it perfectly. Like I'll give you an example on some of our most recent trading. When it comes to the 4 hour, when I was long on Bitcoin back in this area, let's see. So when we were long on Bitcoin first in these or in these discounted prices, because I was longing Bitcoin here and kind of like building over time, it took majority of weeks for us to really get out of the trade or to get into the trade because we were just kind of chopping in this area for a while. And sometimes this low time frame chop can be a little bit of noise because, as you know, and as you can see on the chart, we did end up bouncing eventually. So was able to build a position size here. And then as we started to get into premium prices, I was scaling out of the trade, but I didn't scale fully out of the trade. So sometimes that was kind of like round tripped down to this area to my initial entry. And then, kind of same thing here, we were building longs. And then as price started to push into premium price levels, I was scaling out a little bit early and I wasn't able to kind of catch all the way the move up to 82. So it's not going to work to your advantage. Like you're not going to nail the trade perfectly when you're scaling in and scaling out. But as long as you can kind of catch the meat of the move, you can kind of be profitable. You can kind of get that repetition. And the same exact thing happened with me on shorts here. I ended up taking a short hedge. And then, I was closing, I think I closed once off of this bounce here on the 2025 yearly lows. And then I closed the remainder of it at about that 72 over this past weekend. And then, I kind of missed out on the massive drop, but it was still a profitable trade for me. And it still was a hedge against some of the other long spot positions that I have. So it did its job. Obviously, I wish I would have held all the way until this drop, but I thought that the weekly could kind of save the 2025 yearly lows here. So it's being a little bit optimistic, but nonetheless, it was still a profitable trade you have to be happy about.
Yeah, man, it was a nice trade, especially since everyone was like hyper bullish at 82K and you have to fight against the herd. So yeah, it's a nice trade. Right, I'm going to move on to the second chapter, which is about background and trading lifestyle. So just a little bit more about how you got into trading, really. I know from seeing your tweets over the years that you were in. I know you mentioned you were in stocks. Have I got it right? You used to trade penny stocks, and
Yeah.
had that was that like a good education for you when it came to getting into crypto?
Yeah, it was, I mean, I was kind of like that, that open book when it came to first learning about stock markets and trading. I think I was in like 4 or 5 different paid groups. I don't know if you know any of them when it comes to penny stocks. Some people out there may know them, but like I was in Tim Sykes trading challenge, Foos 4 trading with Cayman Foos, Kunal, Bulls of Wall Street. And so I was in a lot of trading communities and just learning different techniques from so many different people. But a lot of these guys were trading like, junky penny stocks that, would have massive squeezes and, kind of like a pump and dump type of thing going on with these low float, low market cap stock prices. And it was an experience. It was good learning. Like, it helped me a lot, kind of like learning just the technicals. With being a part of those groups, you learn about basically what trading is, different techniques, different fractals, different breakdowns, different breakouts, different retest levels, a lot of basic TA within that. But I think it definitely helped me kind of transition to crypto. It was one of those things that I was kind of focused more on penny stocks because the bankroll was a lot lower back then. Didn't have that much money, was trading a small account. So I thought, hey, let me get into some of these penny stocks and pink sheet stocks and see if I can, hit like a home run and turn it into, 40, 50K real quick. It never happened, just so you know, I never got lucky and hit that home run when I was trading penny stocks. I did okay, but the education was more of what helped me out over the long term because you start learning the basics of like what a level 2 is, right? What the buys and sells are, how to read level 2 within markets. I think that's like a very important I think it's like a very important skill that a lot of people don't actually focus on in crypto is like reading the level 2, or quote unquote reading the tape. People don't, some people don't even know what that is, and it's kind of crazy to me because it's really the way that you see the market like breathe. And so like learning all of that stuff before transitioning over to crypto obviously helped me. Crypto was always one of those things that was scary because it was 24/7. I didn't like that. I didn't like that it was moving when I was sleeping. I didn't like that, I was always, having to think about positions going to bed instead of just getting in and out of the trade and then being done with it for the day. But it definitely helped me, man. It was a grind, I will say that, because the stock market, I still worked a full-time job when I was learning back in the day. So I didn't have like a good opportunity to trade. I had basically the pre-market and then the first 30 minutes of the market open to kind of find positions and close positions. And then I would take my lunch at work during the power hour, which was, when the market closes. And you could get some nice little runners in the power hour, the last hour of the market. And so that was kind of like the way that I ran it. Was I was always looking at the markets every single day. And then transitioning over to crypto, it was actually really nice because you could get like raw price action right in front of you, and you could trade, Asia trading hours. You didn't have to watch videos. You could actually jump onto an exchange and take some trades after work and at night. So it was really nice to kind of transition into crypto because it helped kind of like speed up some learning curves as well.
Yeah, it was nice back in the earlier days as well. I guess you could probably get it with alts and memes and stuff these days where they move a little bit more, but I think the majors have become a lot more efficient. So even though I've been in swing trades, which I don't particularly like doing, you wake up in the morning, first thing you do is open trading view, and like you may wake up in the night if you've got a heavy position on, and just like 4 a.m. you're like, shit, let me just have a little quick look before I go back to bed. I don't
Oh
miss
yeah,
those days, man. So
yeah,
how
yeah.
did you kind of learned most of how you're trading now from those early paid groups, or is it something you built over time from other sources, or was it just like, like you're saying, just reading the tape and building your own conclusions from it?
Yeah, no, I mean that's a good question too. And I'm kind of one of those guys that like I always want to keep learning. Like no matter what. I know that there's always going to be people out there that have more money than me, that are smarter than me, that have more experience than me. And if I could even to this day still learn stuff from them, like I want to learn it. I think that there's a lot of good paid groups within the crypto industry. And I think people get really stuck in their own ways, thinking that their way is the only way that works and everybody else kind of sucks. But over the course, I kind of learned the basics with the stock market, and kind of learning, how to create a setup, kind of create a take profit, create a stop loss, all that sort of stuff. And then, getting over into, crypto, there's definitely been a handful of people that I've learned from over the years. Trader Main has been one of them. The Flow Horse, Cantor Clark, has been one of them. Daniel at Chart Champions has been another one of them. There's really good people that are within the crypto industry that have really good techniques. And I may not apply everything that I've learned from them into my own trading, but over the years, you just kind of have to be an open book to just learning as much as you can. Even when you think you're the best or you've made it or you hit your $2 to $3 million mark or whatever it is that that your goal is, it's still always important to be learning from people, in my opinion. And those are just some of the examples of some of the guys that I think do it really well just within the crypto space.
Yeah, good sources actually, good, very good traders. Those guys. Did you find that during your journey with trading that, I mean, because I'd found it, and just something you just said there kind of tweaked it. When you start, you go through the grind of it, and then you're losing, or you're in break even period, and then you start making the money. Did you ever have a period where you kind of caught yourself maybe being a little bit too, yeah, I'm the man, and getting humbled from that? Because I've certainly had those experiences, and a lot of people I've spoken to have had that, and then had to claw it back from having kind of hit a bottom. Did you have anything like that along the way?
Oh yeah, of course. I think just even with the past recent couple cycles on Bitcoin, man, just and crypto in general, I think when you're sitting at highs of your portfolio or your balances or all that sort of stuff, there needs to be ways that you can kind of protect, right? I think the good thing is, for me, I've always been able to have the ability to take profits. I've definitely had my fair share of round trips that have been disgusting, but a majority of the time, like with Bitcoin and especially Ethereum, because I don't know about you, but I remember buying Ethereum sub $100. I remember having bids at 60 and 70, and being able to hold that and take some off, but still kind of round trip some. I think like for me, the where I kind of felt really frustrated the most was like the meme season. I think memes for me, it was like I was shoveling money into these memes thinking they were the next Doge or, Shiba or whatever. And, granted, they would just be rug pulls. And I think that was one of my most recent frustrations just within crypto in general was the whole pump fund meme season. I can't tell you how much soul I just torched trying to catch the next big meme. And it wasn't just me. It was obviously a lot of people as well were crushed because I think like less than 1% of the actual wallets on Pump Fund were profitable or whatever that stat was. I know I heard Trader Main talk about it too. So it is kind of like a lottery ticket. But I think that was like a big frustration of mine just recently, at least was all of the whole meme space, man. I don't understand how people did it. And of course, maybe they had insider info or they were some part of some cabal or whatever. I know I was never a part of anything that got me to make life-changing money within the meme season. So I just think it's kind of one of those things that, yeah, you kind of do have to check yourself. I probably put way too much money into chasing the meme season, but it kind of is what it is. It's one of those things that it wasn't ever money I wasn't willing to lose. And that's what I've always been good at is being able to protect the capital that you have made previously. And I have responsibilities in life. I have kids, I have a wife, I have family, and so I kind of can't be as degenerate as some people are within this space.
Yeah, I can relate to that as well, especially since like going through that myself. Suddenly, your tolerance for risk is different, and suddenly you don't want to take as many risks, like in general. Yeah, I feel you, man. I think with memes as well, it had. I think it if all of the kind of meta that we've had over the past, however long crypto's been around, the meme coins has shown really like the true colors of crypto, where it has just been we can build a coin, and then we can just like build community of people to pump it and then get everyone else on board and then rug pull everyone. Whereas before, I remember back in the days of like 2017 when you were looking at altcoins to buy, you'd be looking at the white papers, you'd be looking at the company website, you'd be looking at their future like progression and all that, like, oh, this is going to be a good company. When really all it was just like a different way of like rug pulling people, right? And now meme coins is like anyone can do it, and it feels like that was always going to be the inevitable end goal of crypto.
Yeah, no, we've had some really interesting phases, even with like NFTs as well. That was another frustrating part of mine. Just buying NFTs that were, it's like kind of like chasing the beta plays, right? Like you have the big winners, like the Bored Apes, right? And so all these other things kind of come out, and you're like, oh, okay, I'm just gonna throw 10 ETH at this thing and see how it works, and and see if it could be the next big runner, and it obviously isn't. And so NFTs were a little bit rough for me too. So it's like the NFT phase, the meme phase, but I always have to kind of check myself because all that stuff is not what I'm the best at, right? Because when it comes to just trading crypto majors, BTC and ETH, that is where I've always seen the most success within my own journey, right? And so when you're getting out of that realm of chasing JPEG art and chasing meme coins to where they have no technicals, you're just kind of shooting at hopefully getting the right one. That's kind of when I like, okay, maybe I shouldn't try and do some of this other shit that all these other people are like making tons of money on. Good for them, happy for them. But again, it's just kind of like getting away from like who you truly are and what works best for you.
Yeah, I think that's a really key thing as well. Do you think more people were kind of realizing after this cycle now it's like, hey, maybe we should just be Bitcoin maxis and just trade the majors after all?
Yeah, I mean, I would hope so. I think I'm still optimistic that we get some good meme or to get some good altcoin runs. I was actually talking to a few friends of mine yesterday about this, and I do think that when it comes to what the next quote unquote phase for crypto is I think we're going to get back to those like sound fundamental altcoin plays. I don't think memes are going to really run. I think, really heavy VC backed altcoins, some of them have already been kind of showing strength when it comes to like near, when it comes to, like Ondo, FET. There's good AI plays out there right now. What else are some good ones? Let's see. ICP is a good one. Um, I think I already like CRV, XPL, ENA. Hype obviously is kind of stealing the show. Jupe, Ton. Like I think that's going to be what essentially runs next for the industry, are just like heavily VC backed plays that BlackRock's involved with, and Coinbase Ventures, and things like that, because crypto's kind of moving back to going that mainstream route of like, okay, we got to clean this up a little bit. We can't have fart coin going multiples, or any of these Inu, Shiba Inu, all that sort of stuff. And so that's kind of where my next bet is within the crypto industry.
Just going back a bit to your kind of general day-to-day life as a trader now, what does your kind of day look like? Because obviously you started like most of us, you got a job and you're doing everything on the side, and eventually you find a little bit of success. What does your kind of day look like in terms of how much energy you're putting into finding positions and executing positions versus then doing all the other stuff that you're doing with the socials and then your family life as well? What kind of routines have you got for yourself?
Yeah, I think I've always thought like routine is pretty key. Honestly, it's easy to like kind of break routine, but I've always felt like my best performance is when I'm like in my routine hub. And it's nothing crazy. I try my best to not focus too much on work. Obviously, when things get hot, that kind of jades it a little bit. But yeah, I'll wake up and I'll definitely do like the normal, right? Wake up early, get into the gym. I have a gym at the house. I'll work out. I'll try and get something light in, even if I don't have that much time. And then, the kids wake up, right? So when the kids wake up, I'll get about 2 hours of work in from like 5 to 7. Kids are up, and then, I'm with them for breakfast. We get to spend the morning together, depending on like what their activities are for that day. I still try and be like, I try to like always remind myself of what the reasoning of getting involved in trading in the first place was, which was like, time and financial freedom. I think that those are the two biggest things that come from being able to do trading full time. And, so 2 hours in the morning, then some family time. And then, we'll get a couple of hours just looking at charts, posting on socials, maybe from like 10 to 12. And then again, it's like nap time for the baby. Maybe I have to go pick up my daughter from school or take her to one of her activities that she's in. And then, we kind of have like the whole dinner, kids to bed. And then I do look at the computer at night. I actually like focusing a little bit on Asia trading hours too. I think that it can give you a little bit of good perspective on what's happening through the night. So then I'll kind of like top off the day with like looking at the computer and again, posting on X and all that sort of stuff, creating content. For like a good hour and a half, 2 hours at the end of the night before bed. So trying to have that good work-life balance, man. I think you just kind of have to remind yourself like, hey, this is what I've wanted to do my whole life. Now that you have other priorities and other responsibilities in life, you still have to apply yourself to that as well.
All right, cool. I'm going to ask a little bit more about that in the last section, because I'm going to move
Yeah.
on now to the next one, which is what I've called building in the bear market, because I've seen you tweet about this a lot over the past 6 months or so. And I wanted to ask because, as we touched about before we went live, both been in crypto for many years now and seen multiple cycles. And the people that are putting in the energy and the work in the bear market are usually the ones that kind of pick the fruits in the bull markets. Not only with just trading, so as we've been talking about building positions at good value areas, but also like other ventures. So, for example, myself, I'm doing these streams every week. I've got a YouTube channel as well. Um, I've noticed that you have co-founded a little fantasy football thing and another AI venture, which is got another section about that. Um, what kind of thoughts do you have on building in the bear market? What advice do you have to anyone that's kind of, you know, round tripping at the moment from their investments and losing a little bit of hope and feeling a little bit of despair? Because we're always going to, like, the good thing about a bear market, right, is it ends and we get a really decent bull market. So what kind of advice have you got to anyone who's kind of suffering at the moment, and what kind of direction to start building in?
Yeah, I think, look, the bear markets are always going to be tough. I think, it kind of comes with everybody's situation is going to be different, right? So, I think bear markets are like a good time to where, if you have a job and, this was me, like, let me like what on the chart, I think in what, 2018, I was, technically still working in 20, I ended up quitting my job and going full time in 2019. But in 2018 was like a rough bear market. So I still worked a job, you know what I mean? And that was something to where like I looked at it as like a positive, to be like, okay, well, I'm still making money at the job. I'm still saving money. I still have my crypto portfolio that I can kind of learn with. And it was more or less just kind of understanding what the dynamics of an actual bear market and just a 4-year cycle in general were. And then also too, you can always allocate a small amount of your holdings to learning trading. And that's what I did in really in 2018, beginning of 2019, before I was able to quit, was I would always take a small amount to trade with and use it. And if it was like $500 to $1,500 to $2,000, you're trading it like you have 2 million. And that's what I was doing in that my first bear market was I was still working my job. I was taking a small amount of capital and trading with it and kind of building that knowledge account, really kind of trading sideways price action, learning leverage, getting involved with altcoins, like reading about altcoins, reading about, what blockchain technology was, and kind of growing my knowledge that way instead of just being depressed. But yeah, and I think after a couple of other cycles, fast forward to today, I always kind of wanted to be building a little something within crypto. I got approached by Posty and a couple other guys to where they had like this idea of like kind of creating like a fantasy football crypto league, and I thought it was really cool. And again, I've always I love fantasy football. I love all that sports in general. So we kind of were just like, all right, it's a bear market. Let's just kind of build this, see what we can do, and see how it goes, and still kind of be putting effort somewhere, even though the markets aren't the best. But I think this is something that I really struggled with, is learning how to short, or being confident with your shorts, right? Because when you're learning about crypto, when you're learning about it, it gets you kind of excited, blockchain, decentralization, future of finance, all this stuff. You want to be like the biggest bull possible because you think it could change the financial industry. But I really think like trying to be a better short seller, and also, kind of just knowing when that time to be a short seller is. So yeah, it's not the best. I understand like bear markets are tough, but always be learning something. Like I think something that's new that a lot of people are doing right now have been like the AI stuff, right? With like Claude and OpenClaw and all that sort of stuff. So maybe learn that on the side, see what you can do within building an AI agent. Find like a new niche. I mean, really the best thing to have done during this bear market has been to trade stocks, right? So I think, kind of realizing that and doing that. I do trade stocks, but I don't really talk publicly about them. I've kind of built my brand on like, kind of around crypto, but I am still involved in the stock market and done really well during the past, couple of, really the past like year and some change. So, that's always something that, you could have done too, trying to find where the next trend was, where this is, just kind of always be like, again, open to learning things and what people are doing.
Yeah, stocks has been amazing. I'm I think the thing is I'm very confident with my short selling, which is why I've been focusing still on crypto to the downside and not moved to stocks. But I've been talking with XO recently and a couple of other guys, um, about looking into stocks a little bit more, because some of it's just crazy, right? I mean, I like you, like I first started trading. I think the very first thing I started looking at was stocks back in 2013. I never really got into them, and I got burned a few times, and it kind of like put me off. And how news driven it all is put me off as well, because I felt like it was too much workload, and which is why I ended up moving to FX and then crypto. But yeah, stocks is something I'm looking to get into as well. But I think coming up over the next few months, as we talked about in the first section, where we're starting hitting the bottom of the market. The risk reward for shorts is getting less and less, and people are getting less appetite for it. So I think kind of having this time now to maybe just do what you were suggesting, start averaging into positions, figuring out an area or a range which you want to start buying in, and then really having the patience, like you said in your little 3-step system, having the patience to then see it out and build and sort of trust in the history of crypto that things are going to start moving back up towards the end of the year again, right?
Yep. Yep. Yeah. No, that's a really good point too. Is having patience, dollar cost averaging in, spot buys. Doing whatever you can to be able to capitalize on that next hopeful big move forward.
I think I've found something you kind of triggered in my brain was when you mentioned near, and I came back onto social media after a 4-year hiatus back in 2024, and one of the first things I actually bought again was near, and I held it for a few months and then decided like actually I could do with the money, put it somewhere else. This is underperforming. And now I think I probably would have like been quids in if I just held on to it for the past couple of years. I'm not really sure. I haven't checked the chart, but I think that's one of the things as well, right? Is trying to balance your portfolio, and like when things aren't performing, don't try to reinvent the wheel and start over managing your like everything and reallocating funds elsewhere, because with crypto it is one of those things where you never know, in 3-4 years time suddenly you've done like a 50x on it by just holding, right? And
Yeah.
because you bought them in the bear market and took a chance in those things. And it's not every single thing, of course, but sometimes you might get one of those runners, and it might not be life-changing money in the millions, but you could get like 10-20 grand out of something, which is still a lot of money, right?
Yeah. Yeah. Exactly. I mean, I think like Zcash was a really good example of that just recently too. With if you had just if you kind of like knew what Zcash was and privacy, and you just kind of like believed in it. I mean, it made all-time highs just recently, and it looks like it wants to go to above $1,000. Does it? I'm not sure, but that there was people that had just kind of been sitting on that thing for a while, and didn't want to sell, or they really believed in the privacy narrative, and then ended up running like crazy. So it is kind of one of those things to where you kind of want to balance it too, because you don't want to be like married to your bags. But it's also like, well, if you kind of do believe in it and you do think long term that it can do something, big, or help the industry in some way, it doesn't hurt to like hold on to it, especially if you don't like need that capital right away. If it's something that you can like sit and hold for a long time, then so be it. But if obviously you need that capital, you should probably kind of pull it, whatever. But yeah, no, there's, and I think we're really on the cusp of that, man. You kind of said it perfectly, to where it's like, if I had just held for 2 years, it could have turned in, and done this. And I think we're like almost there with some of these altcoins, to where, whether it's, the end of this year after midterms or early 2027, to where if you just have a little bit more patience, these things are going to really send it to some multiples.
Yeah, and then you'll be called lucky in 2 years time for having to grind out
Yeah,
all of this. Right,
exactly.
let's move this on, because I'm where we're over the hour mark now. I don't want to take too much of your time, but next chapter is going to be about AI and trading. So as I touched upon, I'm starting to look at systems to not a fully automated system, probably be a bit more of a hybrid one. Um, but I just want to say as well, there's a thunderstorm that has just like started over my house. So if I get a power cut or anything, that's why. Um,
Okay. All
so I
right. All
saw
right.
you've got a little product as well with AI, in terms of I don't understand it too well, to be honest, what you'd done, but it would help you with level selection and stop placement and things like that, and taking away a lot of the thinking from traders. Is that right? Is that something you're building?
Yeah, so I'm kind of in the middle of like revamping it a little bit. I think I had like my whole I think it was like my whole AI trading system like about a year and a half ago, almost 2 years ago. I think I was just early. I think now it's a little bit easier to clean it up. So I am trying to like get back to the whole automated thing. But it basically was just like a signal, like, right. There would be certain inputs into it. And again, it was tough because I didn't really know how to do the coding myself. So I would have to like outsource the coding from somebody. And that also kind of means that like you have to kind of like give away your edge to somebody or give away the way that you want a system ran to somebody. And then like hopefully it working. So we ended up doing like a really nice, just like it kind of just like automated everything for you. Like if FET was a signal, it would give you FET, it would give you take profits, it would give you stop losses. Same thing. I mean, it was a ton of altcoins and BTC and Ethereum as well. And that was, it worked. It worked for a while. I started to struggle with it because the developer didn't want to make the tweaks that I wanted to make within my own system. There were certain things, and I didn't really know how to do it myself. But I am kind of revamping it now, kind of with all the whole AI agents things going on. Kind of want to do like a Castillo trading agent, working with a few different AI companies to kind of get this dialed in and done. And we'll see kind of how it goes in the coming months. But yeah, I think making things automated just makes it easy, right? You don't have to really think about it so much. And when you have other responsibilities or a family that you kind of want to like be away from the computer a little bit, even if it doesn't do the execution for you, it can still give you a signal to be like, oh, okay, this is the structure, this is the setup. I can take a trade, I can put the stop loss, I can take profits, and then you can kind of be off with it. I'm really excited to hopefully get back to building, a system that really works. It is difficult because even though these developers are really skilled and really good, there's always going to be like little tweaks that don't really hit the way that you want them to hit. But yeah, no, I think AI and the whole AI agent thing is a big narrative to come in the future. I mean, we saw what AI stocks did. I think it's only a matter of time before that flows into crypto AI.
Yeah, I got a funny story actually about that. I have a mate who I don't know where he found this coder from. I think it was from Fiverr and some guy in Ukraine, and he had an idea for how he wanted to automate a system. This is going back probably like 2 years. The guy was working on it for like a year, um, where he would basically like select a level on gold, and then he would run a system where if it did like a wick, and then you want the next higher high, just enter, and it was something kind of basic like that. And the dude like ended up doing a load of back testing with the code that he was writing for my mate, and was like, oh my god, like if you do this, then suddenly you can get way more profits. And hey, look at this. The guy had no like trading background, but he's given away this edge to like some random Ukrainian dude. And yeah,
Yeah.
it's a little bit of a risk because he ran away at some point and didn't like, he had to find another coder to finish the work. Because who knows, maybe this random guy had just been like, fuck, now I can make loads of money, like fuck coding, I've got this guy's edge.
Yeah, no, exactly, and it's expensive too, man. Like I don't think people, understand how expensive it can be. Like my overhead per month on it was like ridiculous amounts of money. I think it was like I don't even remember. It was like 15 or 16K just to keep the thing running, and
Fuck.
so it was not cheap.
Yeah, coders are not cheap, right? Um, but that's something I've also experienced with AI in a different field. I've got like a YouTube channel, like a music channel where I just repurpose playlists and repost them. Um, and I started using ChatGPT and AI a few years ago to create some of the artwork for it, and it was dog shit, man. And now suddenly you can create full on feature films with AI, right? Um,
Yeah,
One of the things that um, I mean, it's obviously way more accessible now as well. You just jump on Claude, and I've started making widgets on my computer. I made the stream overlay with Claude, and like I have no coding background, and it's done within an evening. Um, do you think that more and more people, particularly, we've been trading a long time, we've got a lot of experience, we've done a lot of hard work, and a lot of the grit, and I think a lot of the younger generation kind of put off by that, especially with growing up with smartphones and being able to order food and have it come to the door immediately, go on a dating app, find a bird immediately, all this kind of stuff. They want results now. Do you think that this is probably going to be the path that most people take? And something which I've kind of seen as commentary is that eventually AI is going to take over trading, and like, there's going to be no human trading, and you're never going to be able to profit from the markets. Do you subscribe to that thought, or are you like me and think that's a load of shit?
I don't know, man. Like I think it's like definitely a scare, but I think what also people are, they miss is there's been automated algos running in the stock market for many years already, right? So there's been so much kind of happening over the years where things have been automated for years for a lot of these big hedge funds and these big VC funds, all these guys on Wall Street. And so I think people kind of forget that. I don't think there's going to ever really be a time where manual trading goes out the window. I think that it's kind of already been around. Yes, there's a lot of new things to it now, right? Like you were kind of saying with like the image editing used to be dog shit, and now you can make basically films with it. They're all getting, there's so many more utilities out there. Like with, you have OpenAI, you have Claude, you have Grok, right? So there's more stretch and more reach for the people, the ability for people to get their hands on it. But I don't necessarily think it's going to change everything the way some people are anticipating. Like I said, especially within stocks and trading, things have been automated for multiple years already. So I don't know if this AI is going to take over or surpass that. It might change a few things, of course, but yeah, I don't know. I haven't really found a use case for AI in my life and my business as of right now, other than just kind of something that I've already done. I already tried to make, my trading automated like over 2 years ago. So fast forward now, it hasn't really changed. Like I already was kind of in that realm 2 years ago with making some things automated. So I don't know. I kind of think it's a little crap. But what I do think scares me the most with it is I think the scammers with AI are going to get a lot smarter. And I think, the way that these guys are going to find the use and ability to scam people is going to be a lot more smart, a lot more precise. And I think that's more my worry over like AI taking over trading.
That's interesting. I hadn't actually thought of that, to be honest. I guess what would they do? What would be the worry that they are able to do it at scale a lot easier, or just do it to multiple people at the same time?
Yeah, I don't know. I mean, I actually just got one of my wallets drained for the first time like 2 weeks ago. It wasn't a lot of money, but like, I feel like I've always been one of those people that's been very like cutthroat on not clicking links or not doing this or not doing that. And, I ended up pasting the wrong X link into one of the browsers and, it ended up getting drained. So,
Sorry to hear,
I
man,
don't
but
really
yeah.
know. Yeah, it's all right. It's it wasn't too much. It was kind of just like play funds, but yeah, I don't really know how they're gonna do it. I mean, it could be at scale. It could be AI related scamming for like hacking. I don't know. I just think like for me, I just think this AI stuff is gonna help a lot of people, but it's also gonna help the wrong people too.
Yeah, that's a good point, actually. Right, let's go on to the next section, last one, and I have called it balancing life and trading. You mentioned you got two kids. Did you say two kids?
Yes, correct too.
Yeah. So I've got one. I would like a second, but my missus is not so keen on how because it's been very difficult. But since my boy has come along, it's been very difficult for me to build some consistency. I've been day trading since 2022. Used to be a swing trader, and then moved. Like day trading was my thing and my passion, and I'd found my edge there, and I'd found like a home there. And since I've had my son, like I've not been able to day trade as consistently, and I'm now just kind of realizing I have to change a lot of ways from trading. Hence why I'm looking at automated trading a lot more. Um, so what kind of like impact did it have for you? Because obviously you've been trading for 10 sort of years, and you've had your kids 5, 6 years into your career. Did you have to make many changes, and then how do you balance things now? I know you just talked about your like daily routine, like getting up very early. That means, I guess, an early bedtime. Have you changed all those things to cater for your kids, or like what are you doing to like balance things really?
Yeah, I mean, it's just I don't know. It's kind of like just doing the best, like just doing the best you can. Like I said, the whole reason I always wanted to become, a trader, a day trader, was for time and financial freedom. Those were really my two goals coming out of college. I think pretty quickly after college, I knew you were going to have to work a 9 to 5 for the rest of your life if you didn't kind of do something to change that. I'd worked in the medical field for a while, and grueling hours. Some pay was good, but it was never pay that was going to kind of like get you to that level that you always wanted. It was always going to keep you at like ground base, ground zero. And so, that's where I found the stock market. Was someone had told me one time, like, look, there's only two things that can make generational wealth in a lifetime. One of them is the stock market, and the second one is real estate. So when I heard that, I was like, all right, let's kind of get into stock market and see how it goes. And obviously found crypto, but leading to where I am now, it's like now that I do have time freedom and financial freedom, it's just about balancing it on like what's important. You know what I mean? Like if like you shouldn't be not going to your kids' practice for sports if just because you have a trade in Bitcoin or whatever. And sometimes that may mean like maybe you can't trade for a specific hour in the day. But yeah, it's just about like being on the same page with like your partner as well, and then like the kids, just making sure that they don't they know what times are important. Having a schedule, having a meeting, making sure that they're locked in, and all that sort of stuff. So yeah, it's just I have the daily routine, and it helps too because my wife, she's stay at home mom, so obviously she does a lot for the kids. Really, the mothers are like probably the biggest like badass within the whole system because they're the ones that kind of like one produce the kids and two take care of them throughout the day. And so it's just one of those things that's like, yeah, you just kind of got to be on the same page with your partner and making sure that you can get done what's important. That's always been a struggle too. Like sometimes you may not know when BTC decides to go up and when it decides to start dumping. So it's like, okay, in the middle of the day, you have to run to the computer for like 30 minutes to take care of like a trade, to close a trade, or to enter in a trade, whatever it may be. But yeah, I try to just have like the most consistency, but also realizing, look, I got into this industry to have time freedom so that I could be there for my family. So anytime, we have to be there for the kids or, be there for, wifey or whatever, you have the ability to do that.
Were you like that from the start when you had kids, where you would like, right, kids first, and then like whatever come, what if I have to get into a trade, but I need to spend time with the kid, like screw the trade, I'm with the kid, or was it, it's just one of those things, like you said, you don't know when Bitcoin's going to be hot, you don't know when it's going to dump, so if you have to run off, you can, but you're not like the dad that leaves at 7 a.m. and gets back at 6 p.m. and you don't see the kids at all, right? But it's not that deep is what I'm kind of getting at, I guess. If you're able to be at home, I guess your setup is at home where you are now.
Yeah.
So
Yeah.
you're still around, but you're not, you've still got time and space to focus on, bringing the money in.
Yeah, yeah. Like you kind of know like certain like moments. Like if the market's dead, like sometimes I'll be like, all right, market's dead. Like let's just either like go hang out with the fam or go have lunch with them or whatever after you make some content for the day. Kind of take a break. One thing that really helped me in the beginning was like setting alerts at certain levels for certain things. Like say you're eyeing a trade, you can put alerts on your phone, and if the alert hits, then maybe you go back and you do what you need to do. But use like the tools to your advantage. Like TradingView has great tools, and all these exchanges have great tools as well. I know when I had my first daughter, I was living in Seattle. And what I would always do was anytime I was in a trade, I would just set things up. Like I would set the stop loss in, I would set the take profits in, and I would walk away and go be with my daughter for the morning or whatever before her nap. I'd go put her down for the nap, and then I would go back and check on the trade, see how it was, maybe remove those stop losses and remove those take profits now that I was sitting at the computer and give myself a little bit more freedom. But like the tools that we have within all these exchanges are amazing, and you just kind of have to like utilize them. Set alerts, set your trades up, put in entry. You can do it all manually now across any exchange. So you just kind of have to kind of just use the tools to the best of your ability.
Yeah, I think one of the things that I struggle with, it's like there's that meme. I don't know if you've seen it. It's like there's a picture of a guy on his computer and he's got like a cartoon dream bubble in his head, and it's like spending time with the family. And then the panel below it is he's spending time with the family, and then he's thinking about trading. And I always kind of
Yeah.
feel like that, where I'll be sitting at the computer and I'll be working, I'll be trading or whatever, and I should be with the family. and then like I'll do the stuff I've got to get done, and then I'll go spend the time with the family, and then I find my head is still at the computer going, oh shit, well, how's that trade doing? Or is something about to set up? Or of course it's moving now when I like it's been doing jack shit all day, and then I spend time with the family, it moves. I guess I struggle with that, even though like I've got the same setup as you. My missus is a stay-at-home mum. I've got my office behind me, as you can see, is at home. So like I'm able to be around, but I still feel like most of my time is, or most of my energy and brain space is spent thinking about trading, thinking about building the social media, thinking about like building like ways to improve my trading and stuff. I guess that never really ends, does it? I guess it's a constant battle, right?
Yeah, no, for sure, for sure. I mean, I look, I think one thing that has really always helped me too has been like I've always had like a life coach in my life, basically someone to like put me at like peak performance. I would have a couple people, I would have, you could technically call them quote unquote therapists, but like I like to call them performance coach because most of the time I would go to them and talk about ways to keep my trading sharper, right? To just make sure my performance was at its peak. And that always helps me too, because then you have someone kind of like coaching you along the way, right? To understand what's important, to be in like the quote unquote the now moments, right? To not focus, to not think too much. You know what I mean? So getting a performance coach in my life has like really, really helped. And I got a good one here in Vegas too. And she's a badass that like helps me on the day to day, whether it's like getting through the struggle of a 2-year-old kid or getting through the struggle of losing six figures on a trade. It's kind of just, having someone to just kind of make sure that your brain is as sharp as it could be. So I've always advocated for them. I know Trader Man had a good performance coach on his channel on one of his podcasts too, and I think it's a very underutilized tool for people that are in the markets. Man, the markets are not easy. Like it is a very very rough game to be watching money and watching these moving markets, especially crypto. It's not something that you should be doing by yourself. And so I've always advocated for like a performance coach in some way to kind of like help you navigate not only life but just your trading and performance in general.
That's interesting. I've never been suggested that before. I've obviously I've gone through mentorships before. I had a mentor 3+ years ago, who helped me specifically just to like um, make my like be able to write my edge out. He had a background in quality assurance and data, and he was able to help me strip all the subjective language away and make it objective. But I've never looked at a performance coach. I guess because as a trader, you think you've got it all figured out. It's all down to me and stuff. How would you pick a right one? Like what kind of um, and I guess not skill set they would have. Like what kind of personality would that person be? Like what kind of, is it something specific you'd look for in a coach like that?
Yeah, like I mean, look, so when it comes to like the first one might not be the right one. I think it's kind of like just like putting down ground rules on like what you're looking for within that building of the performance coach and yourself. Like I know a couple of her clients are actually part of the Las Vegas Aces, which is a WNBA team, and then the Las Vegas Golden Knights, which is the NHL team. So she has technically quote unquote coaching some of the best athletes in the world, right? And so that was kind of like a trigger to me. It's like, oh, okay, so she is working with the right people that are performing at the highest level. Like, granted, I am not a professional athlete by any means, but I do think trading needs to have the approach of a professional athlete to where you kind of, this is what I do for a living, this is what I do for my life. And so this is what I do for my family, you know what I mean? And so you kind of like rely on it and you kind of have to put yourself in that like professional threshold so that you can kind of, just like navigate the waters as best as possible.
And then last question I want to ask is, I have uh, a realization that as a father and a husband, that no one else is really going to say to you, hey, like, go and take some time to yourself and recharge. Because anytime there's spare time or any spare energy, someone wants it to help them. Um, but I've realized like you have to like go out and make time for yourself. Is there something you do either daily or weekly where you can just get away from everything, all the responsibilities for, even if it's just an hour? I know you said golf, but anything where you've just, you are chilling out, you are just de-stressing and like processing, your day-to-day life.
Yeah, I mean, I have friends here, in town too that I, get together with. We just went to dinner last night. Had like a nice Korean barbecue dinner and stuff. And it's nice too because they're like involved in the same thing and trading crypto markets. So it's like you can get with them, you can kind of talk about things. If markets are dead, you can kind of strategize, however to approach, the coming months or the coming years or whatever. So that always helps too because when you get with someone like-minded that knows what you're going through, especially if it's like a hard time in the market, then it's very easy to kind of like just get like that, that you time to like hang out with someone and kind of shoot the shit about it. Golf is very, very important to me. I think golf is probably the biggest mental de-stressor that I have in my life. I wish I could go a little bit more. It's getting really hot here in Vegas too, so it's kind of not the best weather to go. But when you get outside and when you're basically competing against yourself, you're competing against your own skills. You have the thought process. You have to think very mentally during the game on which club to use, which thing, um, which direction the putt is, or how hard you should swing the club. Golf is like I tell this to anybody that I talk to. Golf is like the biggest mental like de-stressor for me, just because you can get out there with friends too. You can have beers, you can like talk with the boys and just kind of be outside and enjoy that setting. And it's really key to do that. And then I have a backyard too, so I try to spend a lot of time in the sun. I think that was why we made the move from Seattle over to Vegas, was because we missed the sun, and that whole vitamin D does so much for you on a daily basis. If you could just like wake up, get outside, go see the sun, maybe jump in the pool, like whatever. So I definitely have like a lot of ways to kind of detach a little bit from the stresses of one, like being a father, because having kids is not easy, right? It's very stressful. And then two, the markets as well, to get a little bit of a break from that. So there's a lot of different things that you can do, like pickleball, paddleball, working out, obviously. Vegas can get a little bit dangerous because we'll hit the casinos and we'll go gamble. But sometimes that makes it a little bit worse if you lose money. But sometimes if it could be a little bit fun if you're just like playing blackjack or baccarat with some friends for the night for an hour or two, whatever it is. Kind of get that mental detachment from everything going on back home.
Nice one. All right, man. Appreciate you coming on. It's been a really, really interesting talk. I've really enjoyed it. Um, Anything else you want to say at the end? Any sort of anything you wanted to add to anything you've already said?
Nah, no, man. Thank you for having me. I appreciate it. I know this is long overdue, but maybe we can get together and have another one sometime soon.
Yeah, absolutely, man. Nice one.